Trump has escalated his public feud with Federal Reserve Chair Jerome Powell, sharply criticizing him for keeping U.S. interest rates higher than he believes is necessary. Speaking at a high-profile economic event in Detroit, Trump argued that the Fed's cautious approach is hurting growth, investment, and everyday Americans who face rising borrowing costs. His remarks come at a politically sensitive moment, as Powell is also under scrutiny in a rare Department of Justice probe, adding tension between the White House and the central bank. In Detroit, Trump criticized the Federal Reserve, arguing that recent economic data clearly justified cuts in interest rates. He reiterated his long-standing demand that the Fed lower borrowing costs more aggressively to boost growth and ease financial pressure on American families and businesses. Trump also targeted Powell personally, calling him "that jerk," and declaring he would be "gone soon," a pointed remark highlighting his frustration with the central bank's cautious approach. The comments mark one of the most direct public attacks on a Fed chair in recent U.S. history, reflecting Trump's belief that monetary policy should be more closely aligned with his economic priorities. Trump highlighted that mortgage rates are falling without Fed help, arguing that a more proactive Fed should do even more to cut costs. Fed officials have kept rates steady to balance inflation and employment goals, resisting direct political pressure. The DOJ has subpoenaed the Federal Reserve related to Powell's testimony on renovations to the Fed's Washington headquarters, part of a criminal inquiry that Powell says is being used as leverage over monetary policy decisions. Jerome Powell responded firmly, saying the Justice Department's investigation threatens the very independence of the Federal Reserve. He emphasized that monetary policy decisions, including interest rate adjustments, must be guided solely by economic indicators such as inflation, employment, and growth, not by political pressures or personal agendas. Powell reassured the public that no Fed leader is above the law, acknowledging the legitimacy of oversight, but cautioned that excessive interference could destabilize markets and undermine confidence in U.S. financial institutions. He stressed that protecting the Fed's credibility is essential for long-term economic stability and global investor trust. The situation has sparked pushback from financial leaders and policymakers who warn aggression against the Fed could unsettle markets. Central bankers and Wall Street executives have publicly supported independence of U.S. monetary policy.
If you like this video, then like, share and subscribe to Mirror Now.